Well, how does inflation cut against or with the banks at this point?
So I think, I agree with everything that's said in terms of, is inflation going away? Is it temporary or is it here? I think the different perspective, David, I would have is if you look at the core inflation numbers in August and September, they were actually down quite a bit. And while inflation is here, my sense is it's in the 2 to 3% range. I think 2 to 2.5 is exactly where the Fed wants it. So I don't think this is going to be as disruptive. If I'm wrong on that, and it's significantly higher than 2 to 3%, then I would change that, the conclusion of that. What does it do? I think there's a couple things that are happening that are pretty positive for banks. One is investment banking, which I'm sure we'll talk about. I mean, those numbers in the investment banking portion of the bank's earnings were just absolutely very, very strong. And the other thing is, if we get higher rates and steeper curve, inflation will be one of the things that helps lead to that. The tapering ending will help lead to that. Listen, higher rates and steeper curves are just plain good for financial services businesses.
So let's pick up on that specifically, because there was a time when we could not have a discussion of bank earnings without talking about the yield curve the whole time. And we needed to be steeper, and the banks can't make as much money because it's a flat yield curve and rates are so low. We didn't hear that much talk about this time at all. Are these still banks? Are they still lending money?
Well, it's such a couple of different stories. So let me take a crack at a couple of pieces, but it is a couple of stories. If you look at J.P. Morgan's earnings, and it was something like 11.7 quarterly revenue. Take the 2.1 of provision right back out of that, and you're about 9 billion. And of that, 3.3 billion, so well over a third of it, almost 40%, was advisory fees in the investment bank, not sales and trading. So, the thing you're talking about with the steeper curve and all that, these are advisory fees. At Goldman Sachs, the advisory fees were 3.7 billion in the quarter. So this was a quarter, we talked about how much money is out there and the equity levels. This was a real deal maker's quarter, and the numbers were very, very strong. It brings up another thing that I think is very interesting for the U.S. banks if you're looking at them. All five of the big banks, particularly Goldman Sachs and Morgan Stanley, are truly investment banks or more asset management and wealth management businesses. But even the big three legacy commercial banks have very, very big investment banking operations and have been huge in their earnings. And you think back to the decisions that the regulators and political leaders in the UK, Europe, and Switzerland made post the financial crisis, and the demise of the investment banks in Germany and the UK and in Switzerland. And this is literally a U.S. play right now. So the impact on the U.S. banks has been absolutely terrific.
So let's pursue that investment banking on two fronts. One is how much of the deal making is just because the rates are so low. So the cost of borrowing to do a big deal is almost zero at this point. Encourage you to do it. And the second is what you just said, almost a moat around the business, almost literally the North Atlantic.
Well, it's a moat
around the business.
It's kind of an oligopoly right now for the U.S. banks relative to the competitors coming from overseas. But it's plentiful money. It's very low rates or free, and certainly that's had a huge impact on the ability to get transactions done. That and valuations being I'm not saying they're overdone, but they're certainly at good levels relative to the last couple of years.
So what does that say about the future for U.S. banks? I mean, a Bank of America, for example, has huge deposits, which gives them a lot of capital they can use in other ways to make money off of. Are they going to have to stay as deposit-taking institutions in lending, or are they going to integrate, particularly as we have fintech coming in and a lot of disintermediation?
So the positives are investment banking. The positives are higher rates. But there are some concerns and there are some headwinds. If you take the investment banking operations away from the commercial banks, the larger commercial banks, and look at their core banking business, that core banking business is under threat with higher costs. It's under threat with the need for more technology. It's under threat, as most of the CEOs talked about, much lower loan growth, but also a lot of the lending being done by non-banks, by specialist firms. And then finally, they're under real attack from technology platforms. Particularly, it has been that case for a number of years in the retail sector with PayPal and Venmo and all of that. But now with companies like Circle, that digitization is happening in the commercial activities in terms of large commercial transactions, treasury and transaction services. So One of the numbers that I watch is in the U.S. In 2008, prior to the crisis, the market cap of financial services was about 95 or 96% the banks. Today, the market cap of financial services in the U.S. is about 70% the banks. And it's the specialist firms and particularly with the strong technology platforms that are really taking a lot of the income away from them.
And just briefly at the end, tell me, if you're a CEO of one of these big banks, how do you look at the margins? Where do you need to really invest in order to keep the margins up as opposed to have margin pressure?
So I think the challenge is it's not a lack of deposits, as Brian said. I think the banks are more concentrated and larger today. The big banks in the U.S. I think it's 50% of the deposits in the U.S. are with the 4 largest U.S. banks. So it's really around keeping the technology and the cost side up with the specialist firms and the technology-led firms. I think that's where it is. Now, that larger amount of deposits will feel a lot better as rates rise and the curve steepens as well.
And very briefly at the end, maybe the big question, can they keep up on the technology organically? Or does that mean some of these banks have to take some of the capital generating and make some big acquisitions?
So I think we've seen it with JP Morgan in the last quarter. I think there was 1 big acquisition in the UK and I think 2 in the US. So I think we're going to see that. We're going to see many of the banks invest in technology via acquisitions.
Which will help somebody's investment banking someplace, right? That's another.
There you go again.
Exactly.
So
another way to make some fees.
More investment banking fees. And it will be the U.S. banks getting them.
Exactly.